Hello. Hello. Yeah, a little bit of echo. Alright, so today I am putting together a quick little quick strategy for AXLA. It's one of the penny stocks that moved on August no, I guess it was, when did it move? September the 1st. Maybe it was September the 1st that it moved. And it had a lot of volume. I was looking at another screen and I saw the amount of volume that it had, so that was pretty good. Let's see, radar screen here, AXLA. It moved. Is that as far as it goes? Where's my volume at? I think it's there. Trying some different setups today with my screen, and now that I have this this Lenovo and I got a touchscreen monitor, I can kind of do some different things on my screen here. Not on this monitor, but on this monitor, and so hopefully it can make things move a little bit quicker. But let's see here. Gotta make sure that I'm not missing anything. But I'm looking for a strategy that works on a 15-second time frame for penny stocks. For other stocks like tech stocks and more blue chip stocks, looking for stuff or 5-minute time frame, 1-minute time frame. But on these penny stocks, they move so quickly that you know, got to be in and out. And if the strategy isn't working, then you just need to call it a day. You need to be done with it. So looking at the 15-second time frame for those. So I wonder how come the touch didn't work on this. Well, it's going over high, low, then it's just not capturing this last bit of data here. Okay, well, and it's still not doing it. Okay, I can always do that. Oh, I can double click that. Look at that. Double click that and they can format it accordingly. Alright, so AXLA made 157 million shares of the ticker and traded, which is a lot. Okay, so we'll come back over here to the monitor or the chart analysis screen, and I already put the first one together. I kind of got started on this and I said, well, you know what, I'll do a stream on it. Alright, so anyway, the first one that I put on here was just that the candle would be a bear, so it would be a bearish candle, that the open is over the close. And then the second one is I said that the open has to be over this red line, the 200 exponential moving average, or actually the 200 simple moving average. Alright, I've already blued out these. I've already isolated or indicated that I want these areas, these dips here. I'll put a blue box there. So if I zoom in, I've got to find out what is the logic that is identified by these blue areas. Well, one, we can see that these candles are definitely under the black line, the non-moving average. So we're going to say that the open, close, mid bar, open, that's open, 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 all these are opens are below the non-moving average. So we're going to come over here and we're going to say that the open is less than the non-moving average. Okay, and after we verified that, we got rid of all these that were above the non-moving average. Here, volume, these are just some of the easier ones to identify. You know, moving average, open, close, low, volume. So here we see that the volume is pretty low here on this pullback. So it's below this blue line and yellow line, the 50 and 6 period moving average. So here it's lower than the 50. Here it's lower than the 50. Here it's over the 50. But these are starting to get fairly volatile in here. So this one is under the 50. So I think we've got enough under the 50 that if we were able to take that many trades, then I'd be happy. So another thing that I like to do is, as I go along, I like to put in here a count function. So I'm going to do count plus equals 1. So every time all these conditions are true and it actually plots something on the screen, it's also going to add 1 to the variable called count. And we need to go up here and declare count is 0, and then we're going to verify it. Okay, and so what we did with that while we added the count is we'll come down here and we'll do a print, and we're going to print the count, and then that'll tell us how many of these how many times these things were true, how many dots we have on the screen. So how come we don't have any right now? Variable count 0, plot count plus equals 1, print count. Yeah. Let's see. What's going on here? Unless I'm on the 5. Let me see. Not on the 5. We've got 2 different sets of conditions here. One set of conditions is what I use typically for the 1 minute time frame, and then this other set of conditions down here I use for the 5 minute time frame, which is why it's indicated with numbers beginning with 5. So I have these up here. It should be the 1 minute time frame for the study. 1 minute. Yep, we're looking at the 1 minute time frame. We'll get. I didn't do that. We'll get this one out of here. Remove that one. Close that. And then condition 1 plus equals 1. Print count. Some of the times this thing acts screwy. Is this one of those times? I sure hope not. Let's see. Let's add one more condition. Something like, that's a crazy wick right there. That's a super long wick. Are we having anything with wicks that long? Let's say that the bottom wick cannot be the greater than the range of 7 bars. So the bottom wick cannot be greater than the average of 7 bars. The average total range of 7 bars. Okay. And of course we only get those 2. That's because I said that the bottom has got to be greater than it. It's got to be less than it. Alright, so then it gets rid of those 2. But down here we should have the printout of there we go. There we go. Okay, it wasn't going all the way to the bottom. Okay, so pretty much this 171 is saying that on this screen right now, so on this 15-second time frame, which is I think I'm only going back a day. There's 171 dots. Okay, this is going back 1 day. So there's 171 dots, which is a lot of dots. That would mean 171 trades if you traded it that way. So we really don't need that many dots. We still have some up here that are kind of funky. 9-period moving average needs to be above the okay. I was going to make one where the slope, where we're looking for breakout trades or breakouts above the previous high, but I decided to do this one a little bit different right quick. That's a nice high volume. That's high volume. That's low. On the 15-second time frame, because it's so volatile and it almost becomes a lot of random movements, and to get it in a specific direction, it's a lot harder to find great logic that works consistently on the 15-second time frame. It's just way too small. Probably do the 1 minute time frame, but I was curious. I wanted to do this time frame anyway, and it is proven to be challenging. So let's do something like this. Find the swing high. And the price cannot be within a certain percent of that swing high. So if we try to identify how close this is from that high, let's say 11 bars and 4%. Let's go swing high. If we have 10 bars to make the swing high, we're going to say swing H. Okay, we need to do a couple other things. So if so this is just saying that if the swing high is greater than 0, we're going to make value 2 equal to swing high. Otherwise, it's going to be equal to swing high bar go. That's because if it doesn't find a swing high, then we still need to keep a swing high value, which will be stored in value 2. So that way we can continue to reference it. So now that we have a reference for a swing high, we want to say we want to say that the open is less than swing high times, and we're looking at 4%, so 0.96. Alright, so now we're not getting any of these values close to the swing highs. Not getting those values that we did have close to the swing highs. It's got to be less than 4%. And obviously for whatever penny stock, whatever stock you do, that percentage is going to change based on how volatile, how that stock is moving. So any of those potential bars that were close to the swing high, we're not going to get those. And that's just going to be something that you're really going to want to adjust as you get the trade in for that day and you see how the stock is moving. Excuse me. All right. How do these not make sense? Looking at the moving averages, looking at the bar lengths, looking at the volumes, I think the volume needs to be, well, that one's not. I was going to say I think the volume needs to be over the 50 period volume, but I mean, we get this one, we lose those, and that may be okay. We lose a bunch over here, and that's okay too, because those aren't great. So yeah, I'm going to say that the volume has got to be over the 50 period volume. So again, when we're looking at the volume, we're looking at that, this blue line is the 50 period volume, and the yellow line is the 6 period volume. So like I said, we lost that one, we kept that one. We got some of these over here, and that's okay because those are kind of coming into the beginning of a move up. Obviously, we lost these down here. But there is something very significant about this right here. I think we're going to have to do kind of a range. So we don't want the price to be so far below the swing high, because if it's so far below the swing high, then that means that yeah, you might be moving into a downtrend. So this obviously is way below the swing high, so let's see how far below the swing high it is. 14%. So 14%. So here we say that the open has got to be less than 4% below the swing high, and we also don't want it to be greater than, let's call it 10%, and see what we get. We might lose some other ones. If you look at this number here, you see that now we're down to 12, right? So we actually, from 177, we whittled it down a lot. On the 15-second time frame, I would probably like to see more trades going on, but we could look at that later too. Find a strategy that has more trades. It probably won't be as profitable, but it'll take more trades. But that's not what I'm looking for right now. I'm looking for something that's fairly specific. All right, so the opening has got to be less than 4% below the swing high, and cannot be, has to be greater than, and open has to be greater than swing high times, so we're taking 10% off this time, 0.90. All right, so now as we verify, we got rid of those. We still have those. You see here we're down to 9, so we got rid of 3. I think it's probably just those 3 that we're looking at. We still have that one, that's good. We still have this one, that's okay. I mean, I'd love to get these down here, but nevertheless, I mean, that's just going to be your stop loss distance. Or we can get rid of candles that are so indecisive, kind of look like these doji candles, where we say like the body of the bar is less than 10% of the range. This one would still work. This one would not work, and that's okay because that one came maybe a little bit prematurely. We want these later candles anyway. Then we take this number from 9, we now be down to 8, now we'd be down to 7. I think this one, we might lose that one too, that'd be down to 6. We'd probably keep this one, we might lose that one, 5. So, again, overtrading is not always better than being more consistent. So losing a lot of these along the way up here though, and here it doesn't even look like there was much volume, right? Because you got these kind of what do they call them, Maribozu bars, the shaving candles. Let's see how much volume is there. 756. Yeah, there's nothing going on there. So the volume didn't start until 11:20, 11:30ish. All right, I am going to do that. I like that. We're going to do that. The body has got to be greater than at least 50% times the range. And the range is the full range of the body, is the full range of the candle from high to low, and the body is the range of the body, and it depends on whether or not it's a bullish candle or bearish candle, which one is the high side. But either way, your open and your close, it'd be the distance between your open and your close. And your open or your close might be your high or your low, but we want to see what the body is. So, all right, we got that. Let's verify that. All right, so that takes it down to 3, actually. I thought we'd get it 5, but boom, we got that one. Boom, we got that one. And come on, be another good one. Not a failed attempt. Where is it at? Where is shit at? Zoom out. Okay, so we got 2 right in there. All right, and that's probably only going to be 1 trade. Where's the second one? Is it right there? Oh yeah, I think there's one. Is that one right there? I think so. Yeah. Wow, that candle is nothing. Good Jesus. There's your candle right there. Alright, so it should really only be 2 candles. But they're great candles. Alright, I usually do something with the range. Let's see, did I do anything with the range here? I usually do something with the range of the candle, the range of the target candle. So it would be like the range. So it'd be something like this. The range has to be less than the range of the 7. So which means that the average range of the last 7 candles would be maybe this much. And as we're coming into a rest and it's about to move off again, we want the range to tighten up a little bit, so we don't want it to be long. Long means that it's gotten back volatile. So like I said, typically I'll do something where I want the range to be shorter, or at least the range to be smaller than the candle before it, or the range to be smaller than the range of the 7 period average of the ranges. So that range there is way too small. I can tell you that. So I'll just say the range has got to be, let's see, if I do range is less than the range of the 7, I know we'll get that, but yeah, I don't want to make it too and that range, that actually got rid of that 1 there, not the one we were, the one I was expecting to keep was this one. It ended up keeping this one, which, you know, it's okay. So now we need to see what the risk to reward is. All right, welcome folks. Just chat something to me in the chat, and I'll talk with you. But right now I'm just putting together an algo strategy for AXLA. It's one of the penny stocks that was moving on Friday, September the 1st. So we started out with, I don't know, a couple hundred potential entries. We're on the 15-second time frame. Obviously, the 15-second time frame being so volatile, it's harder to find logic that works really well and consistently with high profitability. But using the logic that we found over here, we have 3. Well, it should be 2 now. Where's that 3rd one at? We got a couple entries, but they're great entries because the risk is very small and the reward is pretty high. So now we're about to put this in a strategy and find out what the optimal risk to reward is here. Like I said, it says 3. Where is the 3rd one at? So I'm zooming out. I don't see that 3rd one because I don't want it to be, right now it would be like 100% profitability win rate, but if that 3rd one is somewhere looking real crazy, it'll drop it down to a 2/3 win rate. But anyways, I'm not going to try to find out where that one is. We'll find it when we put it in the strategy. All right, so to find the risk to reward that we're going to start with, we're going to run this through the optimization report. But to find the risk to reward that we're going to start with, we're going to make an array, and this is going to be like nothing. So 1.4% fine. But this is the one that is going to be of most interest. So let's kind of zoom in on it and find out what this stop level should be. Where is it at? This candle here. So we're going to start the right here, and we're going to go down as low as this area because we don't want to get stopped out. That's 2.3%. And then if we go up as high as these candles, we're going up to 13%. So 2.3 to 13%. So we're going to take what we put together in the show me. So we were able to find what we're looking for based on plotting something on the chart. So now we're going to go to the we're going to put this in a strategy and open a strategy, and we're going to name it similar to what we named the show me. So 15-second AXLA 090323 and that, and we're going to paste that into there. Going to get rid of the and part because we're not doing any plots in the strategy, and then we're going to replace the stop loss with the stop loss number, which is 2.3, and then we're going to replace the take profit with, and if that was, I mean, that would be awesome if you could go, you know, 2 to 13. That, that's like a 1 to 6 or something. All right, so now let's verify this. No errors. Now we're going to come over to back to the chart analysis. We're going to add the 15-second AXLA 9.3. Add that. Properties fall. We got to change the properties. I typically run my strategies with $50,000 account on $35,000 trades at a time, with a 1 share minimum. Maximum is whatever. That's got to be 201. And then we're going to status. Leave it on. Leave it on. All right. So now we need to optimize and see if those are the best numbers for the risk to reward. So do that. Optimize that. That. Okay. And optimize. Doesn't have much to optimize because there's only a couple trades. All right, so now if we look at the optimization report, and I don't know why you're having an error. This is the AXLA. Okay. Net profit would have made $7,000 on that type of account. It did come up with 2 trades. It wasn't 3. I don't know why it has 3. Yeah, and it's 100% profitable. That's because we made a strategy that was, very, very specific. Now, I'm curious of how this would look on other penny stocks, though. So maybe we'll look at that real quick. Here's a performance report. Let's see. I went to my other screen. All right, so $7,000. If you could do this kind of, if you could find these kind of penny stocks and implement this kind of strategy on a yearly basis, you'd be up 21,000% on your account. That's awesome. But, come on. Realistically, all right, the equity curve looks great. It's a straight line. Not much to say there. But like I say, what I would like to see is what this looks like. All right, so this is where it would have took the trades. There's the one buy, the first one that we were looking at. Let's just zoom in on it. What do we do? Got this sweet gaming mouse, and it's super sensitive. Is this green? Hang on. Oh, somebody out there getting in trouble. No, it wasn't this one. It was on Tesla Monitor. Okay, there we go. Do that. All right, so we got the first buy here, and then it took profit up here. It didn't go all the way up to the top. That's because if we had went to the top here, we would have lost the profit over here. So we maximized the profit over here, and we got it in there. Again, we didn't get stopped out there, so that's great. Okay. All right. What's another penny stock that? Well, I won't say penny stock, but yeah, penny stock. All right, so AXLA and then NVOS. Let's see if we apply this to NVOS, what would happen? NVOS would have taken, where is our performance report? Probably would have taken no trades. Yeah, no trades generated. And because again, this one didn't bounce. It didn't bounce and groove like the other one did. I mean, none of them operate the same. For kicks and giggles, let's see. For kicks and giggles, and this percentage, I got to figure out a way to adjust this percentage so it will adjust accordingly to the volatility of that specific stock. But if I put this on Tesla, what would it have done? Well, Tesla was definitely in a free fall on that day, so wouldn't have worked there. All right, so what other stock went up? I don't know, UPTD. I was looking at UPTD. I sure was looking at that. I took some trades on it, did well on the first part of the day, and then not so well on the last part of the day. So UPTD is not capturing any of this, but most of this was in halt. Yeah, I mean, it was in halt status anyway. So it went up, halted, went up, halted, went up, halted, went up, halted. So, you know, I don't think the 15-second time frame would have really captured much here anyway. Who else moved? Net change, UBTD, AXLA, TOP, TAOP, HSDT. TAOP. Well, I don't know what's going on there. It looks like it went down for the day. TAOP. Oh, I think it did. No, it didn't. It says 62%. Maybe it gapped up and then just failed the rest of the day, which those stocks often do. You know, they entice you to get in, and it gaps up during pre-market hours when there's no restriction on the amount that it can change at a certain amount of time. So, you know, these people gap it up during the first part of the day, and then they're hoping to sell, you know, at that high level, which, I mean, it's smart to do, but, you know, it's not smart of us to take those trades when it gaps up that much and people are just selling it. It gaps up for no, you know, fundamental reason. But, hey, I myself, along with many others, I mean, we've taken those trades. Let's see. So if we put it on the 1 minute, now let's go on the 5 minute so we can see. Yeah, that's exactly what happened. It started here that day before, gapped way up, and then it just dropped the rest of the day. So even though it may have been a percentage gain from the day before, it's percent loss day of. So, well, I mean, that's pretty much all that I was going to do with the stock that we're looking at, AXLA. I just wanted to find that, and like I said, maybe we'll come back another day and then do something with different time frames. Maybe do something on the 1 minute time frame. But yeah, on that 15-second time frame, that did work. So let's see. If I was to, let's see, that's a 0.04% from the swing high. I'm curious. Not UPTD. In, what was it, NVOS? If I change this to, I mean, this one performed way different from the prior stock. So if I change this to 2%, would that make a difference? Would that make a difference? Okay, so we're going to change that to now I like to print out what I'm actually working on, so I'm going to go ahead and print this out before I go changing it, because what I did worked for AXLA. Alright, and so, but on NVOS, what I say, it's got to be open is less than 96, we'll do 98%. Let's see what that looks like. And this is on a strategy. So did it take one trade? I think it took one trade, and maybe it didn't close it out. Yeah, but again, it hasn't been optimized for this specific Oh, it did close it out here, but it hasn't been optimized for this specific ticker. So I've still got to figure out what and how I want to do. If I want to use strategies that I've used before on like different penny stocks, and then as they opens up, adjust it on the fly as it goes, and then just try to capture one or two of those later, two of those later entries, and call that good, or So that's what I have to figure out. All right, guys, but this is it. You saw me make a strategy from start to finish. 15-second time frame is not what I love to do, but I like a challenge. That one was fairly challenging, but again, if I could get that to work on multiple different stocks, then we'd be in business. All different stocks have different characteristics, different personalities, different traders, so I wouldn't expect that to happen. But if I could make a strategy complex enough to where it could work, then that would be awesome. Anyways.